Hello everyone, welcome to my channel Echo Mystery. In the today's class, we will discuss about the journal entry, what are the rules we have to follow for posting the journal entry. Only once you will able to know the journal entry, then you can post the prepare the ledger accounts. So and previously in the previous class, we have discussed about the accounting classification and the definitions. Hope everyone is able to understand that also. So let's start with the class. So journal entry. So for posting the journal entry, we have three types of accounts. First is personal account, second one is real account, and third is nominal account. Every account have their own set of rules to post the entry, right? So for the personal account, it is associated with the person's name or the company's name or the organization name. And the rule for the personal account is debit the receiver, credit the giver. It means whoever is providing something to someone, it should be credit, and who are receiving something from any friend or someone, because it is a receiver, that should be debit. So the rule is for the personal accounts, debit the receiver, credit the giver. So whenever you have a transaction, first of all you need to identify which type of account is. Once you have identified the account type, after that you will that apply the particular rule: debit the receiver, credit the giver. Suppose in your business you have received money from your friend. So your friend is your personal account and you receive the money. So who is giver here? Your friend. So what we told: debit the receiver, credit the giver. So here giver is your friend, right? So he should be credit in your books. So cash account debit to your friend. And please understand, in our accounting, every transaction has a double side impact. So if we are debiting something, we should credit also. All right. The next account is real account. So real account pertains to the, it's always related to the asset or whatever the property we have. Suppose any cash balance, any debtor balance. Debtor should be a personal account. It is not related to the real asset, because debtor means it pertains to the individual name, right, or the company's name. So in my mistake, it will not be a real account, it is a personal account only. So for the real asset, any plant and machinery, any furniture, any laptop, any computer, any refrigerator, whatever we have, whatever the asset we have, it is a real account only. So suppose we have purchased any plant and machinery for the business. So for purchasing the plant and machinery, what we have given: cash or money to the external vendor. And what we have purchased: the plant and machinery. So for the real account, the rule is debit what's coming, credit what's goes out. So whatever is entering into the business, it should be debit, and whatever we are, whatever is going from our business, it should be credit. So in the recent example, if you purchase something, what you have to pay? Cash. So cash is going outside the business, so it should be credit to cash account. But for giving the cash, what you are receiving for plant and machinery, so it should be debit, plant and machinery to cash. All right. So I am explaining again. For the personal account, debit the receiver, credit the giver. And for the real account, debit what's come in, credit what goes out. Every time before applying a rule, you have to first of all identify which type of account is. After that, you should apply the journal entry rules, and then you are able to prepare a journal entry. Next is nominal account. So nominal account is always related to your income, expenses, losses, gain of the business, like any salary expense, any wages expense, any telephone expense, any printing and stationery, any communication expenses, any internet charges, any expense, any income, like any sale of goods, any sale of service, any other income, any interest income, any interest received, any commission received. It always comes under your nominal account. And the rule for the nominal account is, whatever the expense you have incurred or losses you have incurred, it should be debit all the expenses and the losses. And whatever income or gain you have earned, it should be credit. Debit all the expenses and the losses, credit all the income and the gains. Suppose you have paid the salary of 8,000. So salary is your expense, and what you have paid for the salary? Cash, because you have to pay cash to someone. So salary is your expense. So Since salary is a nominal account, so it should be debit because it is your expense. And cash is your real account. In the previous example we have learned, right? So it should be credit, because in real account, for the real account, what we have learned, debit what's come in, credit what goes out. So what is going for the salary, cash, so that's why we have to credit it. See, debit what's come in, credit what goes out, right? Second example, received commission of 2000. So you have earned income, so commission is your income, considering if you are a commission agent. So what we have learned for the nominal account, credit all the incomes and debit all the expenses. So commission is your income, so we have to credit it. And what we have received, cash, so cash should be debit because cash is coming. So in short, for we have three type of rules. First is debit what come, debit the receiver, credit the giver. Debit what's come in, credit what's got out. Debit all the expenses and losses and credit all the income and gains. Okay, so going forward we will do some case studies. These are the MCQs also we need to solve. We will discuss first in the class, and after that we have some uh, transaction for which we'll try to solve the journal entries, right? So I'll provide you the rationale behind that. Okay, so let's discuss one by one. Ria invested 1 lakh cash into the business. So cash is, so what she did, she invested some capital. She has introduced some capital into the business. So she has introduced cash, but first of all you need to understand what is cash. Cash, which type of account cash is? It is a real account, right? Because real account pertains to the asset or property whatever we have owned, right? Since she has invested the cash into the business, from the business point of view, the business has received the cash, so it should be debit. Because for the real account we have learned, debit what comes in, credit goes out, right? So in the business cash is coming, so cash should be debit. Okay, in the second account, in the second question is Ria invested 1 lakh, right? So whenever the proprietor owner invested something, it is considered as a capital. We have learned in the previous classes. So it is a capital account, and capital account is a personal account because it is related to their owner, right? So what entry Ria should be posted, cash account debit to capital account, because cash is a real account and capital is a personal account. Who is giver? The proprietor. So what we have learned in the personal account, debit the receiver, credit the giver. Who is giver here? The owner. So owner should be credit, and cash is a real account. Since cash is coming into the business, it should be debit. All right. Next one is purchase furniture worth 20,000. So they have purchased the furniture for 20,000 rupees. So furniture is a real account, right? Because we learned in the previous slide that the real account related to our asset, right? So furniture is a real account and it should be debit in the books because they are receiving the furniture. Next is purchase goods for 15,000. So they have purchased inventory because they have purchased the goods, right, from the Mohan traders on the credit, and on the credit they have purchased it. So they are asking Mohan trader which type of account and under which type of account it consider. So Mohan trader is a personal account, right? Because someone personal name is using here, and they have purchased the inventory, and inventory is a real account. Okay. Sold goods on credit to Suman. So Suman debtor is also a personal account because someone name has been involved, right? And sold goods means it is a revenue, right? Rent paid 2,000. So rent is an expense and it come under nominal account. And as we learned in the for the nominal account, debit all the expenses and credit all the income. So since it is an expense, we have to debit the rent account. Okay. Received 8,000 from the Suman. So Suman is a personal account and we have received 8,000. So cash account is a real account. So for the real account, what we learn, debit what comes in, what are coming in our business, cash. So cash should be debit, and who is the giver here? Suman, and Suman is a personal account, so Suman should be credit. So cash account debit to Suman account credit. Purchase laptop by check. So we have purchased a laptop through check. Okay. So laptop is a real account, and check is also a real account. So what is coming in the business, laptop, and what is going out from the business, cash. So what we have learned for this rule, debit what's coming, credit what goes out. So laptop to bank balance, because bank balance should be decreased because we are paying the money from our bank to someone, right? Electricity bill paid. So electricity is an expense, so it is a nominal expense and we should debit it, because for the nominal account, debit all the expenses and credit all the incomes. On or withdraw money for the personal use. So drawing is a personal account, because whenever they have introduced something into the business owner, whenever the owner has introduced something and withdraw something from the business, it is a it is considered as a capital, and it will always impact the capital account only. And owner is a personal individual, and hence we have to consider as a personal account only. Okay, so these are the below transaction which we have to try for the journal entry while posting it. Purchase of computer for cash for rupees 10,000. Please remember the steps. First of all, you need to identify which type of account is it. After that, you have to remember the particular role for that account. After that, you will give a try for journal entry. Purchase of computer for cash, it means computer is coming, uh, and cash is going, right? But computer is real account and cash is also a real account, so here we have to apply a real account rule. What is the rule for the real account? Debit what comes in, credit what goes out. What is coming into the business? Computer, so we have to debit it. And what is going out from the business? Cash, so we have to credit it, right? Next is Rohit started business with a capital of rupees 5 lakh. So means Rohit is the owner and he introduced the capital of 5 lakh into the business. So Rohit is owner of the business and is a personal account, and he introduced the cash into the business, and cash is a real account. And so on the cash we have to apply the real account rule, and for the personal account Rohit we have to apply the personal account rule, right? So for the cash, what is we have to apply the real account rule, and therefore according to the real account, whatever is coming into the business we should debit it. What is coming into the business? Cash, so cash account debit. And for the Rohit accounts, since it is a personal account, we have to apply the personal account rule. So for according to the personal account rule, debit the receiver, credit the giver. So Rohit is a giver according to the business, because business is a separate entity. So to Rohit capital account, okay, by 5 lakh. Opened a bank account in SBI with the amount of 4,000. It means you have deposited the cash balance into your bank account, right? So from the business point of view, you reduce your cash balance, but you have increased your bank balance, okay? So both accounts are the real account. So as we have to follow the real account rule. What is coming into the business? Bank balance, but what is going out from the business? Cash balance. So bank account debit to cash. Bought furniture for rupees 60,000 and check was issued on the same day. It means you have purchased the furniture and the payment will be deducted through your bank balance, right? So bank balance will be reduced and furniture will come into the business. Both are the real account assets, real account, because both are the asset. So what is coming to the business? Furniture account debit, and what is going out from the business? Bank balance will reduce to bank balance. Good purchase from Sumit Traders for rupees 55,000. So you have purchased the goods from the Sumit Traders. So Sumit Trader is a personal account because you have purchased from the individual, since it is a individual name. So Sumit Trader is a personal account, so he is a giver for you, as you are receiving something without payment of the cash, right? So for the personal account, debit the receiver, credit the giver. So Sumit Trader is a giver, so we have to credit it, right? And you have purchased the goods, it is a inventory, right? And it is considered as a real account. So debit what comes in, what is coming in the books of the in the business, goods, so we can consider as a inventory. Next is goods costing rupees 25,000 sold to Rajni Enterprises for rupees 35,000. You have made a sale to Rajni Enterprises for which you have not received the money yet. It means Rajni Enterprises is your debtor balance and it is a personal account because the name is associated with a personal name, right? Individual's name. So he's a receiver because it receive the goods from your business on free basis right now. So Rajni Enterprises, and you have made the sale, it is your revenue, right? So revenue is your nominal account, and we learned from the nominal account, debit all the expenses, losses, and credit all the income and gains. So whenever you made a sale, it should be credit, right? Next one is bought plant and machinery from Ramji Lal for the business of rupees 1,25,000 and an advance of 10,000 in cash. It means you have purchased the plant and machinery from Ramji Lal, but you have not paid the entire amount. It means, first of all, Ramji Lal is your creditor, center creditor, because you have not paid the entire amount, and it is a personal account. And plant and machinery is your asset, and since it is your asset, is a, it is a real account, right? And you also have given some amount of the cash, it is also a real account. So in this example, plant and machinery and cash is your real account, but Ramji Lal is a personal account. So for the plant and machinery and cash, you have to apply the role of real account, but is coming into the business, plant and machinery, right? And what is going into the business, cash. So what is coming into the business, you should debit it, plant and machinery. What is going out from the business, you have to credit cash to cash account. But who is the giver here? Ramji Lal. So to Ramji Lal, because as per the personal account rule, debit the receiver, credit the giver. So he is the giver in this transaction, so we should credit it, right? Paid the monthly store rent in cash. So store rent is your expense. It is a nominal account, hence, and so we have to debit it, store rent, to cash, because we have to we paid the rent in the cash, and cash is a real account, and cash is going out from our business, so it should be credit, right? So in the last, I have mentioned some, sort of the transaction which you have to try, and in the last I have given the solutions also. Just please, just try to solve this. It's help to get a better understanding about the concept. First of all, I'm repeating again, you have to identify whether it is asset, whether it is liability, whether it's a capital account. Once you identified which type of, whether it is between asset, liability, after that you will able to identify the type of account. And once you are able to identify the type of account, then you will able to apply the exact rule, right? So